Adrian here from East West. In this video, I'm going to present 6 different long-only trading strategies that have been designed specifically for the S&P 500 futures on a daily time frame. Now, these strategies are very simple. They each only have 2 entry and 2 exit rules each. They are relatively fast. They have a relatively short hold time. They're quite frequent and they have a very high win rate. After I've presented the strategies, I'll run through the strategy testing results, and I'll also provide the full Pine script code so that you can have a look for yourself and make any modifications that you may like to make. So let's jump in and have a look at these 6 very simple yet very powerful trading strategies. As the name suggests, in this strategy we need 2 RSIs. The first RSI is a simple 14-period RSI, and the second RSI is a 2-period RSI. Now, I've marked off 85 on the 2-period RSI because this is an important threshold for the strategy exit. And now the entry rules for the strategy. Entry condition 1 is that the 14-period RSI must be lower than the 14-period RSI from 3 bars ago. Entry condition 2 is that the 2-period RSI must be lower than the 2-period RSI from the previous bar. Now, in this example, you can see on the current bar we are entering a long position. Now, the way the code is written is that it has placed a green arrow above the bar that triggered the conditions. And when you hover on that green arrow, it'll bring up the information about the RSIs that triggered the condition. So here we can see that the 14-period RSI on this bar is at 37.12, whereas 3 bars ago it was at 46.12. The 2-period RSI on this bar is 13.42, whereas on the previous bar it was 41.99. That means that both our entry conditions have been met. And so we will enter a long position at the opening price of the next bar. Now for the stop loss. You can see here that a new line has been plotted below the bars. This represents the stop loss level. The initial stop loss is set by taking the low price from the previous bar, and from that low price we subtract the 20-period ATR multiplied by 2.5. This stop loss is a trailing stop loss, so as the market moves higher, the stop loss will be raised to reflect higher lows coming into the market. Now for the exit conditions. Exit condition 1 is that the 2-period RSI must be above 85, which is why we marked it off initially. And the second exit condition, which is standard across all these strategies, is that the close must have the position in profit. For the exits, the code has also placed a blue dot over the bar that triggered the exit conditions. By hovering on this blue dot, we can see the information from the RSIs that triggered the exit condition. So here we can see the 2-period RSI has got a reading at 92.08. The close price is at 42.53.75, and that of course is well above our entry price of 40.39.25. With both the exit conditions met, we can close the position at the open of the next bar and the trade is complete. Now this strategy is very simple. There is only one entry condition, and that is that the close must be the lowest close of the last 5 bars. Now here we can see that the close on this bar was the lowest close of the last 5 bars. And so as the condition has been satisfied, we can go long at the opening of the next bar. The stop loss is set the same way. We will take the low price from the bar prior to entry, and from this low price we will subtract the 20-period ATR times 2.5. Once again, this stop is a trailing stop, meaning as the market rises, the stop level will increase. Now for the exit condition. Exit condition 1, the low must be the highest low of the last 10 bars. Here we can see that the low on this bar is in fact the highest low of the last 10 bars. That means that as long as exit condition 2 is met, which is the position must close in profit, we can exit the position at the opening of the next bar and the trade is complete. For this strategy, we need a Bollinger Band set up with a 20 period SMA and a 2 standard deviation width, and we are looking at the upper Bollinger Band, and we also need a 20 period ATR. The entry rules of this strategy are as follows. Entry condition 1, the low must be lower or equal to the prior close plus the 20 period ATR multiplied by 0.5. And the second entry condition is the upper Bollinger Band must be higher than the previous upper Bollinger Band. So here we have the long setup, and there's a few things to note. Firstly, this code puts the green triangle above the entry bar, and when you hover on that green triangle, it will bring up the information that you need to calculate the conditions. So here we can see that the close was 4077.25, the prior close, and the ATR was at 96.92. So we times that ATR by 0.5 and we get our low level of 4125.71. And we can see on this candle that the low was 40.42, and also we can see that the upper Bollinger Band is greater than the previous upper Bollinger Band. Now you'll note in the indicator that the Bollinger Band has turned green, and that just represents graphically that it is higher than its previous reading. So both these conditions have been met, and so we can take a long position at the open of the next bar. The initial stop loss is calculated the same way. However, take note for this strategy, we've taken the low of the bar prior to entry and we've subtracted 3 times the ATR from that low price to get our stop loss level. Again, this is a trailing stop. The exit conditions are as follows. The first exit condition is the close must be higher than the previous close plus the 20 period ATR multiplied by 0.5. Now once again the code's provided us this blue dot that gives us the information we need to see that the closing conditions have been triggered. So the profit level here is 4240.50. The close was at 4323.5 and our entry price was 4171.5. So that, when we add in our standard exit condition of the position being in profit, means that both these exit conditions have been met, and we can close the trade at the opening of the next bar. At this point, the trade is complete. For this next strategy, we need 3 moving averages. Firstly, we need a 3-period simple moving average. Then we also need a 5-period simple moving average. And finally, we need a 10-period exponential moving average. Now, the rules of the strategy are as follows. Entry condition 1 is the 3-period SMA must be lower than the 3-period SMA from 4 bars ago. And entry condition 2 is that the 5-period SMA must be lower than the 5-period SMA from 4 bars ago. Here we have our long setup, and again the code has placed a green arrow on the chart for us. So as we hover on the green arrow here, we can see that we've got the information about the moving averages that have triggered the entry conditions. So we can see here that the 3-period moving average is lower than the 3-period moving average from 4 bars ago, and the same thing applies with the 5-period moving average. That means that both the entry conditions are met, and we can now take a long position at the opening of this candle. Now the stop loss is set the same way, where we have taken the low of the previous bar from entry, and from that low price we have subtracted 2.5 times the 20-period ATR. And as with all the strategies, this strategy is a trailing stop strategy. Now for the exit conditions, and they're quite simple. Exit condition 1 is the close must be higher than the 10-period EMA. And the second exit condition is the standard one where the position must close in profit. So in case you couldn't see visually, here of course we have a blue dot with the information. The close is at 44.99. The entry price was at 4407.75, so we have closed in the money. The 10 period EMA is at 44.74, so we are once again above that, and therefore we can close the trade at the opening of the next bar. So this trade is now complete. This strategy is a Composite RSI strategy. So to make the Composite RSI, we simply need to take a 24 period RSI, add that to a 2 period RSI, and then divide that by 2. The rules for the strategy are as follows. Entry condition 1 is that the Composite RSI is less than the prior Composite RSI, so the reading from 1 bar ago. The second entry condition is that the Composite RSI is less than the Composite RSI from 5 bars ago. Here we have the entry signal. When we hover on the green triangle, we can see that the Composite RSI reading is 42.77. 1 bar ago it was 75.15, and 5 bars ago it was 70.17. That means that both these entry conditions have been met, and we open the long position at the open of the next bar. The stop loss is set in the same way. We take the low price of the bar prior to entry, and from that we're going to take 2.5 times the 20 period ATR to get our stop, and that stop will be a trailing stop. The exit conditions are very, very simple. When the Composite RSI is greater than the Composite RSI from 2 bars ago, and also the standard exit condition of the position being in the money or closing in profit. So as we hover on the blue dot, we can see that the RSI is 73.95. The Composite RSI from 2 bars ago was 42.77. We entered the position at 4406.75, and the current close is at 45.10. That means that both those exit conditions have been met, and we can exit our position at the opening of the next bar. At this point, the trade is completed. Now this strategy is all about momentum, so we need to calculate 2 momentum readings. So the first calculation, or the short momentum, is simply the close minus the close from 3 bars ago. And the longer term momentum is simply the close minus the close from 10 bars ago. Now the first entry condition is the short momentum must be less than the short momentum from 2 bars ago. And the second entry condition is the long momentum must be less than the long momentum from 2 bars ago. So here once again we have our green triangle, and when we hover on the green triangle it will give us the information that triggered the entry conditions. So here we can see that the momentum is at minus 54, whereas at 2 bars ago it was at plus 46, and the long momentum is at 12.75, whereas 2 bars ago it was at 51.5. That means that both these conditions have been met, and we can take a long position at the opening of the next bar. The stop loss remains the same, so we take the low from the bar prior to entry, and we subtract from that low price the 20 period ATR times 2.5, and the stop will be a trailing stop. Now the exit condition is very simple. The short momentum must be greater than 0. And we also need the standard exit condition where the position must close in profit. Here on our blue dot we can see that the close is at 47.62.5. The entry price was at 47.27.75, so we are in profit, and the momentum is positive at 27.5. Therefore both exit conditions have been met. We can exit our position at the opening of the next bar, and the trade is complete. Now, before we look at the results, it's very important to consider the buy and hold scenario. Now, what I've done here is written a very simple script that buys the opening price of the very first bar of the data set, and it closes that position on the very last bar of the data set. So I've done this just to give us a buy and hold benchmark. Now, it's important to note, while we're here on a big chart, you can see that especially since the beginning of QE in 2009, the GFC, beating buy and hold on the S&P has been very, very challenging, as it has been on all US stock indexes. And that is part of the reason why I've only presented long-only strategies, because short strategies are very difficult to work in a market that is rallying as this is. Nonetheless, if we take the date range here of October 1997 all the way through to basically today's date, we can see that a buy and hold strategy has basically returned a net profit of 225,000 US dollars on one contract. Now, the max drawdown here is about 31.53%. And it's important to keep an eye on the percentages, because the actual drawdown amount will of course vary depending on the size of the account. You can also see here that over the lifespan we've got about 6,873 trading days. Now, we've got to keep an eye on this as well, because the frequency of the trades is also important. It's great to have a fantastic strategy, but if it only gives you 2 trades a year, it's not much good. Now, a couple of other things that are important to note as we look at the setup. I've just come in here to the Properties tab. Take note that I have made the initial capital $100,000. You will see on some other of these so-called strategy videos that they make that initial capital large. TradingView has a default of 1 million. And even though $100,000 is a lot of money, I have tried to bring it down to a level that is more realistic. Now, the other thing to note here is the order size. So I've made this 100% of equity as opposed to one contract. The reason for this, and it's important, is that as the account size grows, so too can the order size. And when we're dealing with strategies like this that rely on the law of large numbers, growing that account to be able to trade more than one lot is important. Also note here, I have not included any commission or slippage. They are important factors. I'll let you put those in as you please. So with that being said, let's have a look at our strategies and how they performed. This is our dual RSI strategy that had a net profit of 243,697 closed trades. So that equates to just under 1 trade per 10 trading days. We had a 73% win rate with a profit factor of 1.3, and our drawdown was about 25%, so that's not too bad. And we've got an average trade there of just under $350, with the average trade length about 7 days. You can see here when we apply the buy and hold, which is the blue line, that our equity curve has basically outperformed for almost the entire time, but it has outperformed over the lifespan of the strategy. Now let's look at the close to low strategy. This one has got a net profit of 285,000 US dollars, 540 trades, so a little less frequent with one trade every roughly 13 trading days. We've got a 70% win rate here with a profit factor of 1.4, so that's not too bad. The max drawdown there at 28%, and the average trade a little bit higher here at $530 roughly, and the average trade time was about 8 days. When we look at this against buy and hold, you can see here that our equity curve has stayed comfortably above the buy and hold benchmark for the entirety of the trading strategy. This one is our ATR and Bollinger Band strategy. So the net profit here was only 209,000, but we did get 898 trades. That's a trade roughly every 7.5 trading days. We've got a pretty good win rate here at 83% and a profit factor of 1.3. Now the drawdown here is a little bit heavy at 34%, and the average trade is a little bit low at $232 with an average trade length of 6 bars. So we can see here that this one struggled to break away from buy and hold, and at the moment it is a little bit behind buy and hold. But take note that this strategy hasn't been optimized in any way. There could be other settings or other conditions that could be added to improve its efficiency. And that could be said for all these strategies. Next we move on to the Composite RSI strategy, and this one has a net profit of $285,000, and it's quite a frequent trader at 1,045 trades. That means we're getting a trade out of this strategy roughly every 6.5 trading days. We've got a really good win rate here at 84, just under 84.5%. The profit factor at 1.3 is not too bad, and the drawdown at only 21% is quite good. The average trade's a little bit low at $273, but it is a shorter term system with the average time in trade only 4 trading days. You can see here with the buy and hold that it has comfortably held above buy and hold benchmark for the life of the dataset. Next is the SMA and EMA strategy. So here we've got a net profit of $277,000, a little less frequent on this one with only 604 trades. So this one gives us a trade every roughly 11.3 trading days. A pretty respectable win rate at 82% and a good profit factor at 1.6. The drawdown is at about 26%, it's not too bad, and the average trade at $460 is pretty good, and the average trade time is about 5 trading days. When we compare to buy and hold, we can see that our equity curve has once again comfortably held above that buy and hold benchmark for the entirety of the data set. And now we have the momentum strategy. So here we've got a net profit of $237,000, but this one's much more frequent at 1,039 trades. So that gives us a trade roughly every 6.6 trading days. We've got a pretty good win rate here at 82%. The profit factor a little bit low at 1.3, but the drawdown's okay at 24%. The average trade size a little bit low at $228, but due to the frequency, we are in and out relatively quickly with an average trade time of only 4 trading days. This one was doing quite well against buy and hold, but buy and hold has since come back and it's running pretty neck and neck. So this may be another strategy that needs a little bit of optimization. So there's just something we do need to talk about with these strategies. So if we come here to the performance summary, and I'm just going to come down here. Look, there are quite a few things that you would have to think about with this strategy and any strategy that you see. But this one is important, okay? So this is full transparency. Now, the percentage profitable is correct at 84%. But how do we achieve that? Well, one of the ways that we achieve that is that we have quite a large negative skew on this strategy and all the others. So we can see here that the average trade is about $272 US. Now the average winning trade is a little bit under $1,200 US, but the average losing trade is a little bit under 5,000. So that is quite big losses when we compare to the winnings. So that is something that you have to take into account, and something you'll have to decide if that's the sort of thing that you are prepared to live with. Now, just generally speaking, what you're going to find is when you find very high win rate strategies like this, it's highly likely that that is why they have such a high winning rate. And all these strategies are very fast in and out systems, so they take small fast profits and they take a lot of them. But when they take losses, they take rather large ones when compared to what they win. So that doesn't necessarily mean that the strategy is bad or that it doesn't work, but it is just one of the things that you will have to think about if you are going to create strategies like this. If you want to create strategies where you win more than you lose, then your win rate will definitely drop. And I can definitely do a series of strategies that have much better winning amounts as opposed to losing amounts, and the skew on those trades will be much more positive. But the trade-off is that their win rates will definitely be lower than the strategies that I've presented here. So just be warned that any of these strategies that come out claiming these really high win rates, well, I've been through this again before. I think that most of them are fake, and when they're tested, they fall apart. But real strategies, and what I've presented, these are real strategies, not fake strategies. These are real, simple strategies that traders would use. But we go into them knowing what the ins and outs of those strategies are. So hopefully the link that's provided in the description will bring you to this page on GitHub. So here is where all the codes are provided for those interested. So all you need to do is select one of the codes. Let's say the Composite RSI, and we just click on that. And that will bring up the code itself in a raw form. So if you come over here to copy raw file and click that once, the code will be copied to your clipboard and ready to be pasted into the PineScript editor. So then all you need to do is come back here into TradingView, and if you come down to the bottom of your page to the Pine editor, all you got to do is open that up. Then you just need to go open here, new strategy. So when you open up a new strategy, this will load up the TradingView's standard strategy script. Now the file you copied from GitHub should still be in your clipboard, so all you need to do is from version 5 or whatever version PineScript is up to when you view this video, you just need to delete what's there, and then it's just a matter of pasting in whatever you copied from GitHub. So now that that code's pasted in, all you will need to do is to hit save, and then you can save this to anything that you like, any name you require. Once it's saved, we can just come over here, add to chart. If you just click once on that, okay, and here is the strategy now added to the chart. Now you'll have to go through yourself and into the settings to make the same settings that I presented, or you can change them any way you like. The main thing is though that in the Pine editor, all the strategy logic is there for you, ready to go. Also in the settings for the strategy, you will see that you can change the ATR multiple if you like, and I've also just included the ability to turn on and off the labels as you wish. So there's nothing too much here that's customizable. I didn't really want to turn this into a strategy or a script that was released on PineScript. This is just something for you. You can come down here and change the strategy logic to whatever you like. Everything else is relatively the same. So it's not a bad template for you to use to create your own strategies. It's all right here. I will just point out one thing, that the code I got for the trailing stop loss I took from a lovely South African chap named Robot Traders. It was just a nice elegant script, so I just used his template because it worked quite well. And so that's it. These strategies are very, very simple, but they are quite effective. There is still a lot of work you could do around each of these signals in terms of optimization, and you could always mix and match other conditions with these existing conditions to make even better strategies. The template's there with the code, and I would encourage you to begin to play around and see what else you can come up with. Experiment, see what you can find. But always remember, simple is best. So if you want to see any more strategies for different instruments, let me know in the comments. So that's it for this video. Thank you very much for watching, and I'll see you next time. Hooroo.